down payment assistance program. This is what allows you to do a FHA loan with 100% financing. Basically, the way that it works is the borrower will get a second mortgage to cover that down payment. So there will actually be two loans, a first mortgage and a second mortgage attached to the property. You can get 100% financing. The second loan can either be a repayable or a forgivable second mortgage. And we'll talk about the difference between the two. While a normal FHA loan will allow you to go to a 55% debt to income ratio. And that is if you're putting the 3.5% down. Now, remember, on a regular FHA loan, that 3.5% can be gift funds. Those gift funds can be from any relative or an employer. So that's something to think about too. Excuse me. The forgivable down payment, you have no interest on it and you have no payments on it. But of course, there's nothing for free in this world. So we'll talk about what the differences are. Once the first mortgage is current and at the time of payoff, then after 60 payments, which is 5 years, that loan is forgiven and it just completely goes away. So if the first mortgage is paid off before the 5 years goes by, then the full amount of the down payment loan will be due and payable at the time that the house is sold or refinanced. So that's something to think about. If they're not going to be in the home for at least 5 years, you do not want to do the forgivable down payment. The property has to stay owner occupied for the whole 5 years. So if they own that house, they bought it as a starter home, they had another kid, they now need a 3-bedroom or 4-bedroom, they're going to upgrade to a different property, then that down payment loan is going to be called due and payable. The minimum credit score allowed for that program is a 620. The maximum amount of that second mortgage is 3.5% of the purchase price, which is the exact amount of the down payment. So if you're trying to get them in, not just for 100% financing, but for no money down, then you still want to ask the seller for concessions to cover the closing costs. Because even though it's 100% financing, that's not 100% of what you need at the closing. So the rates on that first mortgage are significantly higher than on the repayable option. So let's just say today, an FHA regular loan that lets you go to the 55% 55% debt ratio, that you can get a gift for the down payment or use your own money. Let's say that was at 6.25%. This forgivable down payment loan is going to be really close to 8%. I think 7.75 today. But remember, you don't have payments on that second mortgage. So let's talk about the repayable down payment loan. So that second mortgage can be 3 to 6% of the purchase price. So you can use some of that for closing costs as well. You have to have a higher credit score on that. It's a 660. The loan is amortized over 30 years, but it comes due and payable after 10 years. So if they're not, aggressively paying off that down payment loan, they could end up with a balance and maybe need to refinance after 10 years. The interest rate on that second loan is 9.99, and it is a fixed rate loan. The interest rate on this one is better than on the forgivable down payment loan, but it's still about a point higher than a traditional FHA. So like we said, on a traditional FHA, if that's 6.25, this one's going to be about 7.25. And I'm just using round numbers. Those aren't exact interest rates, but just to give you an idea. One really, really cool thing that we can do with this down payment assistance loan is a blended score. So typically to get an approval, we need about a 640 credit score. You can qualify with a lower credit score than 640, but to, kind of know that it's a good loan and everything will work out, you want to be at around 640. If you do the blended score, then it's got to equal 660. A couple of little kickers about this. The person that makes the most money in that household has to be the one with a higher credit score. And what does it mean they make the most money? That means that they make at least 60% of the household income. And there's no minimum credit score for the lower wage earner if the average credit score is 660 or higher. So like we talked about on this program, you've got to have that 620 credit score. There's no minimum if you're blending the score. So let's look at a couple of examples of how a blended score works. So if you have a primary wage earner and they have a credit score of 651, 760, 761, and the secondary wage earner has a 600, 603, and 610. Now, we do use the word here, unemployed. Oh, whoops. I got to go back. I'm sorry. I want to do the slideshow. Okay, we'll just be like this. We do use the word here, unemployed. If we're looking at a loan, we would probably take off a borrower that had a lower score if they were not providing any income to this file. But if we do need the income from that secondary wage earner, and these were the credit scores that they had, you would take the 760, which is the middle score of these, plus the 603, which is the middle score of these, divide by 2, and you'd have a 681. You're always going to round down. So that would qualify because you would have a blended score above 660. Let's look at another example. The primary wage earner has a lower credit score. The secondary wage earner has a higher credit score. This loan will not qualify because remember that rule, the primary wage earner has to have the higher credit, and the primary wage earner is considered the person that makes at least 60% of the household income. So example 2 would not qualify for the blended score. So what we would do in this case, we would work on this client to get their credit score up. Now we could try running it and seeing if we get the approval, they can put the 3.5% down because they would qualify for the traditional FHA if we can get the approval at these scores. If not, we counsel them on how to get those scores up. Example number 3 is a primary wage earner has a 680, 670, 660. The secondary wage earners in the low 600s. We add these two together and that only averages for a 636. So again, that loan would not qualify because the blended score is below 660. So what we would do in this case is we would try and qualify with just the primary wage earner, see if that worked. If we needed the income from the secondary, we would counsel them on how to get that credit score up. So I'm going to kind of run through this again really quickly. We've got what is a down payment assistance loan. You have a second mortgage allowing 100% financing. 2 types, forgivable and repayable. Forgivable, remember, has a much higher interest rate on it, but as long as you keep that loan and live in that house for 60 months and always make your payment on time, that loan disappears. It is forgiven and goes away. The repayable, you do have to pay it. It balloons in 10 years, but your interest rate is better than on the forgivable. So you have 3, where am I on the camera? 3 kinds of FHA loans. Standard, best rate, forgivable down payment, highest rate, and in the middle, repayable down payment assistance with the middle of the road rate. Now, this blended score thing can be a little confusing, but that is what we are here for. The thing to remember is when we average those scores, we have a 660, and that the primary wage earner has to be making 60% of the income in order to use the blended score. All right, does anybody have any questions? Did I go too fast?
No.
Not one single question. Well, I hope you found it worth your time, even if you don't have a question to anybody.
Well, I have
Okay.
a question.
Yeah.
Is this only FHA?
Yes, this is
Okay.
only on FHA. Now, USDA will do 100% financing. And conventional, you can do with as little as 3% down on a primary residence. So, but there are a lot of reasons that people will go with an FHA loan. And that could be debt ratio. That's kind of the number one. I'm having just a brain melt. What's the minimum or the maximum loan amount for FHA? Can one of the loan officers answer?
472,030.
472,030. So, if you're buying something with a loan amount that would be higher than that, then you'd need to go with a conventional loan. Any other just regular FHA questions? Any classes on any programs that anybody is interested in learning about?
Maybe we can announce about the new mortgage insurance, monthly mortgage insurance on FHA, how much cheaper it is now.
Yes. If you haven't seen, most of our loan officers have posted on their social media. The factor for the mortgage insurance with FHA used to be 0.85. That is dropping to 0.5 and some change. What that essentially means is on a $300,000 loan, it saves you, I think, $70 a month on your monthly payment. So that's very significant. With a traditional FHA loan, the interest rates are better. That mortgage insurance is now very comparable with a conventional loan. So going with an FHA loan is much more attractive from an interest rate standpoint, especially if you're not doing a seller paid buy down. Good point. Anything else, anybody? All right, if you have any questions and you're not comfortable asking now, please reach out to your loan officer with any questions. We're really here and want to be a part of your team and help you learn more and make more buyers. Remember, Bar Group's goal for this year is to make 100 renters into homeowners. So if you've got anybody out there renting, please have them give us a call. If their credit's not ready, we can help them with what if simulators and wayfinders and things to get the best score, which is also something great that we can do for your top tier loan officers. Now that Fannie and Freddie have increased the best credit score from a 740 to a 780, it's even more important to work with a loan officer that's not just going to look at the info that's presented to them, but look at how to present that info to the underwriter in the best light to get the best rate. So that's something that we do for all of our buyers. I mean, unless they're 800 credit scores, to make sure that they do get the best rate that they can get, even if they're top tier or what was considered top tier borrowers. Okay, that's all I've got. Thank you guys so much for joining today, and we'll do another one next month.
Thank you.
Bye-bye.
Bye.